Hello fellow traders, welcome back to my channel. Today we have a special video dedicated to one of the most profound and important topics in trading, which is the price action technique. That is not a strategy, this is a whole range of technical analysis methods that allow you to understand the market more consciously and mindfully. If you want to take your trading to a next level, learning price action is a must, and this video is especially for you. Today we will look at what price action actually is, how it helps to make more informed decisions, and why it should be combined with indicators for a more accurate analysis. And we will also hold a live trading session, as always, where we will show you how to apply these techniques in practice. And now I'm gonna finally stop rambling. Welcome to Mindful Trading, and let's get started. Price action is a method of in-depth market analysis based on observing price movements. This method includes the analysis of candlestick patterns, support and resistance levels, trends, and other key elements of the chart. Unlike indicators that rely on mathematical calculations, price action gives you direct information from the market. Also, price action is not a strategy in itself. It is a set of techniques that can be combined with various indicators to obtain more accurate input signals. And although the number of signals is less than in standard indicator strategies, their quality and accuracy are much higher. Price action includes several key elements that help a trader understand the market. Number one, support and resistance levels. They are the main horizontal lines on the chart that show where the price has found support or resistance in the past. These levels are important for identifying potential reversal points in the future. Next one are trends. Price movement in a certain direction, in other words. The trend can be an upward trend and a downward trend, and the ability of you correctly identifying the trend is the basis of success in trading. And next one, candlestick patterns. They are combinations of candlesticks that provide information about the likely further price movement, and the most common patterns are hammer, engulfing, and a dodgy one. The ability to trade with price action is mostly just the ability to find zones where the market makers are really interested to put their positions. So let's look at the chart right here, and we see the chart is coming from 6 a.m. till around like 1:40 p.m. It's today's chart. Let's see what's happening here. First of all, it's Euro US dollar chart, and we see that there was an uptrend, and we can say that we're gonna start from here because the beginning of it, the uptrend from the beginning, is not really important. First things first, we are looking at the support zone forming here. So every single time price going to this level was jumping back up, and that means that from this point of the price there was enough buyers to open their positions for the uptrend, and that means that the chart is growing and the price is growing up. And we also see that there was another little touch, and the price went again back up. And after this huge, not really huge, but huge jump, there was again the touch of support zone and more active movement, and from this movement we see an uptrend, and it's a slow movement of the price going up. So that means that our lower lows and higher lows, and higher highs are updated every single time, and the price was doing like a couple of jumps and reaching at this point right here, going back to trend line. The price didn't jump up but broke through the trend line and went down. And I think you understand that at least from this chart you can enter into a deal from this point, and from this point. From all of the jumps from the trend line, you could enter into the uptrend point And all of those are not using indicators and only looking at what's going on the market right now and understanding what market makers want right now. So when the price broke through trend line, you could open the deal for the downtrend. And now we see that the bulls are trying to show us some movement right here, but right here we're gonna put the support zone. And we see that in the future, this zone is actually working as a resistance zone, right? And of course, as you can move our old support zone further into the future, we also see another jump here, another potential entry point for an uptrend. Also, we see right here, besides the resistance on the top, we see that there was a small little trend line right here. It's a small one, but still, if you get closer, that would be look bigger. And this is a triangle pattern. We talked about it in one of the previous videos. And at some point, this should be broken. And when the price broke through the trend line, through the triangle, it went down. And again, it reached the support level right here again. And resistance is not working after everything that happened after the triangle. A little correction happened after, and again the support line worked. And if we continue looking at what was going on, again you will see that all the patterns are repeating itself again and again and again. And we see even here the same trend line, we see higher highs and higher lows are updated, new uptrend, and again it broke through the trend line, and we see again the jump from the support line. Everything is quite similar to each other, and potentially you can find around like 10 entry points that you could use only using price action. We don't need any indicators to analyze what's going on the market. The only thing we need to do is understand when market makers are going to make what decision. So for example, if we understand right here, after 2 jumps from the resistance line, and we understand that this is a resistance line and this is the level where the sellers want to sell stuff, that means that after reaching this point, the price is going to go down because market makers are selling right now. And also, if we see that there is 1, 2, 3, 4, 5, 6 times the price was jumping from the support line, there is a big possibility it's going to be the 7th time again. Guys, don't forget to support the channel with your likes and share this video with your friends to help us grow and create more high quality content. Indicator's main job is to find you a specific entry point at what specific time you need to enter into a deal for a downtrend or uptrend. A lot of people think that working with price action, you can understand the general idea. So for example, right here, I see the downtrend and I understand that I need to enter into the downtrend deal, but I don't know when to enter into the downtrend deal. So for example, if we would open it here, the deal would probably be closed in red. And again, same situation here. So what do we do in situations like that? Let's look at the chart first of all. Here we see that there was side movement, then a sudden drop of the price, and then there was a correction, like a small uptrend, like a mini one. But even though we still understand that this is a downtrend, because the downtrend should be seen from the swing highs and swing lows. So for example, here we obviously see it, and if the price would break through that level, then we could say that there was an uptrend. Until the price is in between of those 2 levels, this is still a downtrend. Even though there was a small uptrend, it still didn't broke through the highest point. And we understand we are in the global downtrend, Jesus. So we need to find entry points for the downtrend. Also, we need to find the trend line, and in this case we can do that. We need to connect our biggest points, like the highest points of the chart, and connecting all of them, we understand that the next jump is going to happen somewhere along this line of the trend line. Of course, it's really important to understand that this trend line is just a zone. It's not a dot. And it's not just a straight line. Of course, there is some possibility that it's going to be a bit higher, a bit lower, but still it's like a line that you need to draw for yourself. So we see the downtrend again, and we need to find the entry point. So let's see that right now we have the price moving to our trend line. Is there a point for us to enter into a downtrend deal when the price is still moving up? No, of course not, because the price can break through the trend line. But let's see what's going to happen. And we see that we have two candlesticks forming on the trend line. Really big green candlestick that breaks through our trend line just a little bit, but the next one is the momentum red candlestick. And it's not just the red candlestick, it's also the same size. It's open a bit lower. It's like, you know, it's an engulfing candlestick, you should know that. And it completely absorbed the growth from the previous candlestick. And this is a really strong pattern that the price shows us that the price is gonna go down, because all the patterns show us a certain history, a certain story. For example, here bulls are really, for them it's really important to break through this trend line. And they understand that the price is gonna go up again, and they of course give the big strong impulse for the price to go up. And of course we see that the bears are right now winning, and it's a principal place. It's a really important place. It's happening right on the trend line. Here we understand that most probably the price is gonna go down, and from this point we can enter into our deal for a downtrend. And in our case, we see that the bears are winning and we are getting our money. Learning price action techniques opens up a more informed approach to trading for a trader. Instead of relying solely on indicator signals, price action allows you to understand what is happening in the market at the moment. And this is a deep analysis that helps you see the structure of the market, not just the surface data. However, due to the complexity of the analysis and of course the subjectivity of interpretation, it may be difficult for beginners to master all these subtleties and nuances of price action at once. But as soon as you master these techniques, you will begin to make trading decisions more confidently and mindfully. New traders have a really interesting belief that price action traders don't use indicators at all, even though that's not true. For example, me, I use indicators all the time, even though I'm a price action trader. First of all, I analyze the chart with my eyes because I use price action with the analysis at the beginning. But of course, I use additional confirmation, as I told you many times, and let me show you how I do this. So, for example, we see the same currency pair, Euro US dollar. We have a significant drop of the price, and the price reached basically this level. And of course, you better look at what was happening previously in the past. And there was nothing interesting here, and the support and resistance lines, the previous ones, they were broken through, and here we have a different picture. So the price was dropping until this point, meeting no barriers, and right here we have a big fight between bears and bulls were trying to get the price again higher. The price went still down lower than this level. Last impulse from the bulls pushed the price again up, and the price still went down because the bears are winning. The price went back again up to the same level. Let's put it somewhere right here. Make it thinner. Yeah. So reaching this level, the price went down again, and it happened actually twice, I can say, that from this candlestick and another impulse, and again down. And again, we are moving this level further in future, and this is the third time actually this level is working for us. So from this level, price action trader understands that somewhere here there is a potential for us to enter into a downtrend deal. And indicator traders would think that we would probably be in uptrend right now, and there is a point for us to enter the uptrend deal, but that's not true. No, we are only looking for the downtrend deals right here. Let's look at the candlesticks that we have here. Let's delete this one. So reaching this level right here, the green candlestick, we have the big gigantic red momentum candlestick completely absorbing the two previous candlesticks, meaning that the bears are taking the control over the market, and that is actually enough for us to enter into the downtrend deal. But what I think is additional confirmation is the key for everything, and I'm going to use indicators. I will use the stochastic here, for example, and we see that the price went to the bought area. We have the crossover from the blue and orange line from the top to bottom, and that's a signal for us. So we have our level, we have our pattern, engulfing candlestick pattern, and we additionally have stochastic confirming the idea that we need to enter into the deal from this point into the downtrend. So I have three confirmations here, and that's what I usually do. So when I combine all three of the confirmations, I see that I'm doing the right thing and getting my money. If you want to dive deeper into price action techniques and learn how to use indicators for a more accurate analysis, join my online academy. There I share my knowledge and experience absolutely for free. Text me on my Telegram and I will help you master all these techniques. Link is in the description box down below. Now let's move on to practice. I will make several trades using the price action technique in combination with the stochastic indicator. Let's see how it works in real market conditions. Okay, let's get to Quotex and see how we can use all the theoretical knowledge that we just talked about on the real market. I already added all the currency pairs with the good payout. The 61% was almost like everything else is a good payout, and we can finally start. I am going to use 2% from my balance, and the expiration time is gonna be 3 minutes, just like how I like it, you know. Of course, I'm adding a stochastic escalator with standard settings for now, and let's get started. Okay, so first one was found quite quick, and I found it on Euro and Japanese yen. And the situation is following. We have an uptrend. It's jagged, but still we have really good higher highs and higher lows, higher than the previous ones, and reaching the trend line. The price started reacting from this point, but again came back to the trend line. And right here we have the doji candlestick pattern. This is the pattern with three candlesticks, red candlestick, red one with a really small body, and the green candlestick. And the red doji one shows us that there was indecision in the market, and the green candlestick shows us that the bulls are winning over the bears. And we're looking at stochastic, and it shows us from this point we have potential growth because we have crossover of stochastic lines, and they also went over 30% level. I opened the deal for 3 minutes. We now need to wait for it to be closed and get our money. Okay, so it's supposed to be closed in black, so we got the money, but the Quotex is not saying anything. Oh, okay, now it is there. So right here we read the market correctly. Let's continue and try to find a couple more entry points for the session to be a success. Okay guys, so generally price action trading is a lot of patience. So 5-10 minutes ago I found this level, and this is a really good support level, really powerful one, because price jumped from it 3 times and the price went back right now. And I wanted to enter into a trade from this candlestick actually, but it's really important to understand and know that It's not the only thing that the price went to this level, because what we see here from this red candlestick, we have the green one, but the green one actually has a big shadow on the top. So that means that the price went to this place and went back down again. And this candlestick is not enough for us to enter into a trade for an uptrend, because there is no strong impulse. I waited for another candlestick, and again, we don't have a strong impulse from the bulls, and we're still waiting because the price can still go back, you know. And after this, there might be the growth of the price, but the bears can still win and the price can break through and go even lower. But for now, what we're gonna do, we're gonna wait, because for now the uptrend is being drawn, but we need to wait. So let's see. So what we're gonna do now, we're gonna again risk it for the biscuit. And what we have a downtrend, and of course we will look at the last two jumps. At this point, the price went really fast down, but in comparison with the first one, the second one, the price is moving really slow. And what we have in terms of patterns, and this is 3 black rows, 3 red candlesticks, and each new one is higher than the previous one. So that means that the bears are putting a lot of pressure on the market, and this deal looks quite good. And also stochastic doesn't show us that there is an overbought area, sorry, but it's still around the 60% with the crossover right here. So that's why this is a bit risky. No confirmation from stochastic, but we additionally have the level and the patterns. Sometimes it happens, and I actually show you all the sessions just the way it is, and you've seen me doing this before, so this is nothing new for you. You know I do this, you know I do stupid things, so you will learn from my mistakes if those are mistakes. So let's see if this is a mistake or it's not. Let's wait. Okay, so I was right. Not that bad for today, and as you can see, the pattern showed a correct idea. The price still went down and the pullback is completed. Let's look at the Australian dollar and a Japanese, and whoopsie doopsie, we lost the moment here. We looked at this chart before, and I showed you this level that I drew a while ago, and from this point I had no courage to do it, but it would be also closed in black, but still it is what it is. I drew the trend line showing us the downtrend, basically knowing that if the price is gonna break through the trend line, which actually happened, but I lost the moment because I was busy with another deal. And it is what it is. We will find something else, and maybe we will come back here, but for now the price is doing a correction, and at this point I'm not touching it, I'm moving on. Okay, so let's look at this situation right here as well. It's also a risky one, of course, and it doesn't concern stochastic, but let's look at the situation. We have an uptrend. At some point I put the line and I was trying to find the entry point right here. Couldn't find it, but right now what we see is that the price broke through the trend line, and additionally this is the higher high, there is the higher low, and the next high is a lower, so it's a lower high. And after this the price broke through trend line, went back to the trend line, and from here we have this situation from this level. Why I entered into a deal right now? In this place right here, this is our last recent low. That's a recent high, that's a recent low. And the fact that the price broke through this level, it's a signal that the price could continue falling down. And in this situation, that none of those candlesticks none of them broke through the level until this red candlestick. After I saw this red one, I want to try to catch this moment, to catch this movement. And I'm expecting the downtrend to happen. Let me put the trend line, another one, and I'm planning that the price is gonna go along this trend line. But again, the price is still much higher than I need it to be. So let's wait, and we have 1 minute 30 seconds, and let's see what's gonna happen and if I am right. Oh, right, I was not right, and the deal is closed in red. We have consolidation happening here right now. But again, it's what happens sometimes, you know. So the price was actually higher than our level that we entered into a deal. We lost $173. Next one is going to be for $350 to cover the loss of this one. I don't really do that often, but sometimes martingale can be useful. And I think that right here it is possible that my prognosis was correct and the price is going to go down, but we're going to delete everything right now here, and we will just, you know, look at the price, what's going to happen, and I will either use this chart or move on to the next one. Okay, so the price is actually going down. Oh shit, it's growing again. So right now, basically, I'm kind of scared to enter into another deal, and I guess we will try to find something else. Maybe in a couple of minutes I will go back, but for right now, I'm skipping this situation because that is too risky, even if from this trend line there is going to be a reaction. After this consolidation period, I believe that I need to wait for a while and try to find something else. Alright guys, so I finally found potentially good entry point. Right now we do not have it. It takes me a while, and I'm gonna open everything on the low payout this Friday, and if I don't make this video today, I will be able to do it only on Monday, and I want to do it today. So right now I'm hoping for a potential entry point, and right now it's not happening, unfortunately. But the situation right here, the price is going to this support level, and the stochastic is in oversold area. And if we see the impulse movement up from the price, then we will potentially see the growth of the price. So let's wait, because we have an example that happened a couple of minutes ago. So let's hope and wait, cross your fingers, and let's see what's gonna happen. Alright, so let's risk it for the biscuit. So I'm afraid to lose another chance to enter into a deal earlier. I actually pressed it. Oh, finally it's open. So what do we see here? We see our doji pattern, the red candlestick, doji candlestick, and the green candlestick. And that shows us the potential of the bulls to get the price up. And that's enough for me right now. We will see if I'm right. And of course, right now we see that the price is going down. You didn't cross your fingers. I know it's your fault. It's not my fault. I'm just joking. So let's wait and see what's gonna happen next. Oh my god, so you redeemed yourself. I know you crossed your fingers, but at the end you decided to uncross them. Still, we got our money. It was such a long session, I'm so tired. But it would be weird to end the session with only 3 deals, so this is what we have today. So thank you guys for watching. I hope you enjoyed this video and it helped you understand why it is so important to use price action for more informed trading. Don't forget to subscribe to this channel and click that notification bell to avoid missing any of my new videos. And I will see you in the next one. Bye bye.